We're really excited to be here. We'll start the pod, I guess, in a couple minutes, but just quick introduction. Nick and I run an early stage venture fund called Castle Island Ventures, based in Boston. We invest primarily in companies in the blockchain infrastructure space. We started this podcast kind of as a joke in 2018 when we left Fidelity to start the fund, and it was kind of just an excuse to speak to interesting entrepreneurs every week. And then we started this Friday version where we just talk about everything that happened in the world of blockchain that week. So that's what you'll hear in a few minutes here, just a rundown of what happened this week in the blockchain space, what deals got funded, there's some regulatory news. So we'll go until Ian puts his hand up and gives us like the 10-minute warning, and then we'll open up for a couple questions to end out the podcast. Does that sound good? Perfect. All right, well.
This is actually our first ever live podcast taping, so it's exciting.
It is exciting, yeah.
Are we actually live? Are we recording over there on the audio side?
Thumbs up to start? All right.
It looks like we're recording. Okay, great.
All right, well, here's how we go. Welcome to On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
And we're live. We are recording this in Quincy, Massachusetts for Boston Blockchain Week. Ian Kane and John from Cubic are hosting us. We're excited to do it live. We're doing it live.
Yeah, thank you for having us. There's like a gigantic storm going on outside, so if you guys hear rain, that's because there's like basically some sort of monsoon happening here in Boston.
It's true. And Boston Blockchain Week is happening in Quincy because Elizabeth Warren and Stephen Lynch are so hostile to the industry. They had to go south. They chased us out of town. And so Ian is trying to save us and by having this in Quincy. So we thank him. I think Quincy will be the blockchain mecca of this part of the world going forward.
That's right. So I think we're going to do the podcast as usual, and then we're also going to have questions at the end.
Yep, all right, so let's dig in. So let's start out with some deals of the week. First one up is in our portfolio, actually. I always love it when there's a Castle Island deal. So Yellow Card, which is an African crypto exchange, they have raised $40 million in a Series B round. It was led by Polychain. We participated, Third Prime, a number of others. Congrats to the Yellow Card team.
Next up, we have Sardine, a financial fraud prevention platform. They raised $52 million from Visa and Consensus.
Sardine is a good name. That's not my name of the week, but that's a good name. Next one up is Integral. This is a creator of a real-time finance and accounting tool. They've raised $8.5 million this week from Electric Capital, Alad Gil, and Balaji.
Next up, Maple Finance, the well-known DeFi protocol, has launched a pool, a $300 million lending fund with Icebreaker Finance, focusing on Bitcoin miners. So this is a DeFi lending protocol, lending to real-world public businesses in the Bitcoin mining space.
Those Bitcoin miners have just gotten hammered on the public markets. It's interesting to see new capital being made available to that sector. There's a lot of pain in the Bitcoin mining space right now.
And the Bitcoin miners get usurious rates in the credit market, so this is actually a welcome development for Bitcoin miners that need to lower their cost of capital.
Next one up is Trace. I think that's how you say that one. That's a provider of data lakes for Web3 companies. They raised $7.6 million from F2, Mantis, and Newform Capital.
Then we have Satchel, which is a Web3 compliance business. They raised $5 million from Brand Foundry Ventures and others.
Big one this week from Masari. This is Ryan Selkis's company, a crypto analytics business. They have raised $35 million. It was reportedly at a $300 million valuation, being led by Brevenhauer Digital, with participation from Morgan Creek, Samsung, FTX, and others. Congrats to the Masari team.
Yeah, huge congrats to Selkis and the team over there. A stalwart business in the crypto industry, and I think really aiming ultimately to be a disclosure platform for crypto assets when and if that becomes something that the SEC asks of the industry.
I just hope that Selkis is able to sell Masari or take it public pretty quickly because the presidential election's coming up and we got to get him involved. I think that's his future, the champion of the industry.
He's definitely not been a secret about his political ambitions.
Yeah.
That's for sure. Next up, we have Vulcan Forged, a play-to-earn gaming platform. They raised $8 million from Skybridge Capital and others.
That's my name of the week. Were you a Star Trek guy?
No, I never watched it.
Vulcan, that's a Star Trek reference. Next one up is Spot. This is a metaverse startup. They target remote workforces, and they've raised $5.5 million from Freestyle and Liquid 2 Ventures.
Then we have Immortal Game, an NFT-based chess platform and marketplace. That's the most creative business model of the week, I think. They raised $15 million from TCG, Cassis, Greenfield One, and Kraken.
Did you see that chess scandal this week?
I saw some news about it, but I didn't understand it.
The guy who was like the #1 ranked
Magnus
quit,
Carlsen.
and there's all these rumors that he's cheating, but people don't know how he's cheating.
Because there's the view that his opponent was using like an AI model to play chess with.
There's some conspiracy around how the cheating was done, but it's unclear that there was no walkie-talkie or anything, so they don't quite know what happened. But a lot of things going on in that chess space. I'm sure blockchain will solve all of that.
I mean, I think we are at the point where the best human players are not even remotely skilled enough to challenge the best chess algorithms.
It's definitely passed the humans by. Yeah. Next one up is Hyperlane. This is a blockchain interoperability platform. They raised $18.5 million. It was led by Variant, participation from Galaxy, CoinFund, Circle, Figment, Blockdaemon, Kraken, and NFX.
And last deal of the week, ImmuneFi, a crypto security platform, they raised $24 million from Framework, Electric Capital, North Island Ventures, and Third Prime.
Busy deal week. So the macro might not be good, but the early stage financing market is still on fire in the blockchain space, at least.
Completely. Yeah. I mean, that's as busy as I've seen it.
All right. So a lot of news happened this week. Why don't we start with some regulatory news? A lot of stuff going on with the SEC. So the SEC has reached I guess they're suing Ian Bellina for a $35 million settlement. So to get this right, I guess they reached a $35 million settlement with an ICO project called Sparkster, and they've charged Ian Bellina, who's kind of this notorious crypto influencer who was pumping ICOs back in the day, and they've charged him with failing to disclose the compensation that he received for pumping these tokens. Not really a surprising one to me.
Yeah, so I actually wasn't familiar with Sparkster. Apparently that was a $30 million ICO in 2018, but so Ian Bellina had this project, I guess. What was it called? Token Metrics?
I think it was called Token Metrics, and he had these leaderboards. Remember that?
Yeah, and he would rank ICOs according to their, whatever, investability. And one of them was Sparkster. In fact, Sparkster got like the best grade.
And the best is that the SEC filing actually has a screenshot of this. Ian's opinion, #1, Sparkster, Hall of Fame ICO. This is a Hall of Fame ICO. There's a bunch of all-stars and some starters, some substitutes, but this one was the best ICO of all time on his platform.
So basically, the SEC settled with Sparkster, and then they sued Ian Bellina, claiming that he was pumping an unregistered security, but he did not settle, right?
I have no idea. I mean, this is the guy, remember, he was doing the live stream, and he said he was being hacked in real time, and all of his money went away or something?
Right.
There's a lot of shenanigans with this guy. Definitely not someone that we should be rallying around and saying that the SEC should go softer here. I mean, this is some of the worst behavior in the industry.
Yeah, I mean, we can be critical of the SEC while also admitting that some of these blatant violations are bad,
This list, man, do you remember some of these? Virtue Poker, Eden Chain, Cork Chain, Sovereign.
Yeah.
Autonomy. Oh, man, the Internet of Things ICO. There's so many of these that bring back memories from the bad times.
I think the only one of these projects that's still around is Telegram, albeit in a different form now.
And yeah, it was forked off. So Metronome, that was a Jeff Garzik special ICO. A lot of ugliness here.
In the case against Bellina, the SEC had an interesting passage on standing, because the SEC said that because a large fraction of Ethereum users are in the US, that the US has jurisdiction over the Ethereum network.
I saw that, and that doesn't make any sense to me, and I don't know why they wouldn't have just said, hey, we have standing in this case because Ian Bellina's 2 feet were on the ground in the United States while he was scamming people.
Yeah, why did they have to do this incredibly creative interpretation of where the blockchain is instead of identifying where the individual that committed fraud was?
Makes no sense to me.
So does that mean that everything that happens on a blockchain is the blockchain is present in the United States of America.
I suppose so, right? I mean, there's AWS is pervasive, so I guess everything is in the US.
I mean, if Ian Bellino wins the case because this is a terrible argument, I actually wouldn't be surprised.
I would think that with this case, you could just go down the list of everything that he's done and just bring additional cases. I wouldn't be very bullish. I would not be taking the odds on him winning this.
Yeah.
But there's other SEC news. This Ripple case, what's going on here?
So Ripple, XRP, the token, has been on a tear recently. They're being sued by the SEC. The allegation is that they did billions of dollars in sales to basically retail investors of what the SEC thinks was an unregistered security. This case has been going on for, I think, 2 years now. And so now the price of XRP is like a prediction market on whether Ripple will win this case or not. If you think Ripple will win the case, presumably buy the token. And Ripple has actually had a couple key wins in the lawsuit. So the judge allowed this amicus brief to be filed that was favorable to Ripple. They did some other incomprehensible legal thing that I don't understand. And basically, it appears that Ripple investors think Ripple is going to win this case against the SEC, which in my opinion is the most important. Not that I'm very sympathetic to Ripple, but I think it's the number one most important lawsuit happening in the crypto space.
I guess. I mean, I've always thought that XRP was a security, so I'd be kind of surprised if they win this, but the price of Ripple is actually going up right now, so maybe the market knows something.
Yeah, and Brad Garlinghouse gave a talk yesterday at the Messari Mainnet competing conference over there in New York.
Two best friends right there, Selkis and Garlinghouse.
So there's apparently, they seem kind of, I don't know, I guess the mood out of the Ripple camp is positive, optimistic.
So stay tuned. Another big story that happened this week was Wintermute. So Wintermute is one of the largest crypto market making firms in the industry. They were hacked this week. It was on their DeFi wallets. So they were hacked to the tune of $160 million. As of the time of this recording, they've sent a message to the hacker and offered a 10% bounty to classify the attacker as a white hat and not go after them. Thus far, no response. They haven't gotten the money back. It looks like this was a brute force on the vanity addresses. Is that your take?
Not a brute force, but the vanity generator that they used was compromised. It used bad entropy. So the story is kind of crazy. The reason that they used a vanity address, which just means like an Ethereum address that has some identifying features in it. In this case, it had a lot of zeros. They did that because it was more efficient from a gas perspective to do transactions with an address that has lots of zeros in it.
Interesting.
So they didn't, normally you do a vanity address because you want to identify yourself to a counterparty when you're receiving a transaction, and they can know by looking at the address, oh, this is like Matt's address or whatever. So some people do it for that reason. Wintermute did it for the reason that Ethereum has a weird quirk where it's cheaper to transact on-chain if there's a ton of zeros in the address.
I had no idea.
And so the problem was you can generate vanity addresses just by repeatedly generating public keys and getting one, you do it trillions of times, and you get one that kind of looks like what you want. And they just used a bad, buggy generator to do this, and it cost them $160 million.
It's crazy. I will say this, the founder and CEO, Evgeny, has handled this situation about as classfully as you can. I think he comes out of this looking really good for the way he's been publicly messaging and disclosing the equity on the balance sheet and what they can make good on to their lenders, which is everything. So I thought he's handled it really well. It's a terrible situation, obviously.
Yeah, it also speaks to the success of that organization that they can apparently absorb a $160 million loss and still be solvent and functional. It looks like it was their own proprietary capital that was basically hacked here.
People want to know why Citadel is entering this space right now. It's because a crypto market maker can lose $160 million and shrug it off. There's a lot of money to be made in crypto market making.
Completely. There was some other political news about one of these pending lawsuits. Another very important crypto lawsuit is Custodia, which is the bank, well, it's attempting to be a bank, I guess, under the special purpose depository institution license in Wyoming, which is a new piece of legislation that was introduced a couple of years ago. They applied for their master account at the Federal Reserve. After 19 months of waiting, typically the Fed is meant to give you an answer within a year. After 19 months, they sued the Fed, saying that they're being stonewalled, basically. And that case is still ongoing. A bunch of members of the Senate Banking Committee, including Cynthia Lummis, have now filed an amicus brief. So they're urging the Wyoming court to dismiss the Fed's motion to dismiss. So we're trying to we're trying to dismiss the motion to dismiss the case. So basically, retain the case. Double negative.
It's kind of crazy. So the Fed just won't give them access to FedWire is what this amounts to. So they got approved in Wyoming to have a bank that is very friendly to crypto, and the Fed is just saying, well, you can't move dollars through our pipes.
Yeah, the Fed, even though legally, from a statutory perspective, the legal interpretation has always been that if someone successfully applies to a master account and they get it, and in this case they did it under the charter, which is just very much the law in Wyoming, you have to give the decision within 12 months. And the Fed hasn't given a decision one way or the other. So basically they're very hostile to crypto, and they are bending or breaking the law in not approving or denying this application.
So I've been thinking about, we need to be a little bit more specific from what we want from these politicians. There's two representatives in Massachusetts local government that proposed a workforce bill that I thought was really positive. Representatives Cutler and Garabedian, to train people to be blockchain engineers. I think that's great. At a federal level, I think what we need is an act of Congress on two key things. One would be DeFi, just decentralized financial services. And my view is that it just needs to be dead simple. And it needs to say the CFTC has oversight over DeFi, go figure it out. And we need the SEC out of that. The other thing I think we very clearly need is just clarity on whether or not some of these things are securities or not. And so I think the easiest way to do that would just be to say, hey, SEC, you have 6 months to put the safe harbor proposal, Hester Peirce's safe harbor proposal, into action, which will give token projects 2 years to come into compliance, whether they're securities or not, with a disclosure regime. So I think those two things really open up the industry to a lot of pools of capital that are just waiting on the sidelines right now.
Yeah, and if you want, maybe a vision of what future legislation could look like in the US at the federal level, I would look at what is happening in Europe right now. So just this week, the EU has finalized their text for their crypto regulations. The bill is called MiCA, M-I-C-A, and they finally firmed up the text, although it's an evolving process. And it's pretty interesting. Honestly, Europe will now, after this goes into effect, have far more regulatory clarity on the topic of crypto. It's not necessarily clarity you want, They're clarifying that they don't like a lot of crypto, to be clear. But so there's some very interesting regulations in there. The first one is they don't want dollar-based stablecoins circulating in Europe.
So what do they want, euro stablecoins?
Yeah, so that kind of answers the mystery of why Circle USDC has issued a euro stablecoin. Above a certain threshold of usage, dollar stablecoins in Europe would effectively be prohibited.
People don't want regular euros. Why do they want euros on a blockchain?
Yeah, I mean, inflation rate in Europe is shocking.
Yeah.
You probably want to hold dollars, even if you're a European transacting.
I think I'd rather hold one of those Ian Bellina ICOs than a euro.
So you're going to be forced to hold euros, assuming they get their way. Crypto asset platforms are going to have to make disclosures to their clients, so exchanges. Well, first of all, if you're issuing a token, you have to make a set of disclosures. So this is very much a disclosure-based regime. If you run an exchange and you list Bitcoin, for instance, there is no individual that can make a disclosure on behalf of Bitcoin. Then the exchanges have to then make those disclosures on behalf of the crypto assets.
Okay.
If they list decentralized crypto assets. And so basically, it's all about consumer protection. The Europeans want regular crypto retail buyers to be getting information regarding the assets they're buying, whether it's from the projects directly or from the exchanges that are listing them. That actually seems pretty sensible to me.
That seems pretty sensible to me. I mean, you'd want to have a disclosure regime around when early investors are rolling off, what the supply schedule looks like. That all seems very common sense, actually.
Yeah, and the interesting thing is this law treats NFTs as just a broader part of the crypto market. So they don't have any special carve-outs for NFTs. A lot of people think NFTs aren't subject to securities law. They can't be securities because they're not, necessarily fungible. The EU says, well, actually, that's nonsense. These kind of look like securities, and we're pretty much going to treat them identically to other crypto tokens. I think they probably have a point there.
That'll be interesting. There'll be a lot of back and forth on that part.
So the other piece of this law is stablecoin issuers are going to have to retain a capital buffer, whether or not they are algorithmic stablecoins or fully asset-backed stablecoins. So basically, algorithmic stablecoins are out.
Yeah.
Doesn't surprise me. I mean, that was the biggest debacle in the crypto markets of the last year, and regulators hate them. Unsurprisingly.
There's a new law being proposed in the United States that if you issue an algorithmic stablecoin, you go to jail for 5 years. Did you see that? I don't know if it has any chance of passing, but might not be the worst idea.
Yeah, I mean, I'm not surprised that regulators are incredibly hostile to these things. I mean, the amount of retail individuals that lost money on Terra or the secondary fallout is astronomical.
It's incredible. So some personnel news this week. So Kraken founder and CEO Jesse Powell is stepping down, and Dave Ripley, the chief operating officer, is taking his place. What a hell of a run, huh? Jesse Powell just built one of the great franchises, and looks like he's stepping down to spend more of his time focusing on policy, which I think would be great for the industry to have him more engaged. Ripley's a killer. Ripley's a great choice to replace him. So congrats to Jesse on an amazing run.
Yeah, I mean, Kraken was founded in 2011. And it really was one of those original crypto exchanges along with Bitstamp. I think it was founded even before Coinbase. Now, they had a tough ride. They were almost out of business, and then I would think the Ethereum ICO kind of saved them.
Is that right?
In terms of the trading volumes from Ethereum. Now, of course, they're doing really well. But yeah, amazing run for one of the stalwart CEOs in the industry.
Speaking of, I guess some people would call him a stalwart CEO. I've got my issues. MicroStrategy and Michael Saylor buying some more Bitcoin. They bought $6 million worth of Bitcoin on Tuesday. I hate how this is always a story. It's like Michael Saylor dribs and drabs a few more Bitcoins. This guy is not doing anything other than buying Bitcoin, by the way. He buys Bitcoin. He tweets about it. He's never once invested in a Bitcoin infrastructure company.
That we know of. If I was a shareholder of MicroStrategy, which I would never be because it's just a Bitcoin tracking stock, I'd really question, what's the strategy here? I mean, shouldn't you be investing around the edges of Bitcoin into companies that actually make Bitcoin more usable and bring more users in? And I don't know if this tweeting strategy is really the best thing for shareholders. I think there's a school of thought in the Bitcoin industry that the success of Bitcoin is just preordained. So it's like Bitcoin Calvinism, So like, why even bother building any infrastructure for Bitcoin to make it more usable or, side chains or anything? Because Bitcoin is just guaranteed to take over from a monetary perspective. I really think Saylor probably subscribes to that school of thought.
It's like a Bitcoin madrasa, just brainwashing. I don't really get that.
Yeah, and it's nihilistic. I mean, like, Bitcoin is code written by human beings, and the code sometimes has bugs in it, and it relies on a whole financial infrastructure. Just buying Bitcoin alone is not enough, in my opinion.
So the other story I want to quickly hit on is NASDAQ has come out this week, and they said that they're launching a digital assets business. It will start with crypto custody. It looks like it will also involve exchanging the assets. Unclear if that's a central limit order book or if they're just running an OTC brokerage service on top of their custody platform. They're starting with Bitcoin and Ethereum. No one really talked about that this week, but seems pretty bullish to me.
Yeah, definitely. I mean, it's interesting seeing the trend of this broader sell-off in crypto markets versus the real institutionalization. I feel like we say this every single week, but BlackRock is now in crypto in earnest. Rumors are that Fidelity is finally turning on spot trading, at least for maybe Bitcoin. NASDAQ is in. Franklin Templeton is jumping into the fray. BNY Mellon is now acting more aggressively. You know, like half of Wall Street is now pursuing active crypto products. I would say it's quite different from even a year or 18 months ago.
Jamie Dimon, very much not in, though. he had some great comments around a range of issues yesterday when he was testifying, but he said that he thinks that decentralized cryptocurrencies are Ponzi schemes.
Yeah, decentralized Ponzi. Yeah. Which is funny because Jamie Dimon, he fluctuates because sometimes he'll say really hostile things, and then he'll walk it back a little bit. But then now he's walking back his prior walk back, and he's fully against crypto again.
I mean, he has a team that's working on Bitcoin custody, and he's saying these things. It's just like, how are these people still working there?
Yeah, I mean, JPM has been active in the crypto space for 5 years.
It's incredible. Least. I mean, so why, if you think it's a Ponzi scheme, why are you offering it to your customers?
Right.
What is
that allowed?
I don't know.
Today in real world adoption news, Helium now has struck a deal. The Helium network, which is a decentralized network for basically telecoms based on this crypto protocol, so you get paid to put a little Helium router in your home, has signed a deal with T-Mobile.
Are there any Helium miners in the crowd? I knew it. There's always Helium miners.
People love Helium. Yeah.
You run into people all the time that are mining Helium.
Well, I mean, it was a great business to be in for a long time. Yeah. So basically, Helium network doesn't cover the whole US, not even close, at least for 5G. And so now they are patching into the T-Mobile network, and through their forces combined, you'll be able to get wireless.
The T-Mobile network doesn't have good coverage where I live, so I hope that this improves it.
Well, you clearly are going to need to put a Helium router in your home.
You can't buy one. They're like sold out. It's crazy.
Really?
Yeah, it's the supply chain issues.
Well.
All right, so why don't we open it up to some questions from the audience, and we'll riff a little bit.
And I think we'll just repeat the questions so that it gets it into the final transcript here.
My name is Michael. Thank you for your presentation. Love listening to you guys. Just wondering if this SEC lawsuit might be some long-winded effort to figure out a new testing system to discover or determine whether or not crypto assets may or may not be securities. It's just baffling why it's taking so long, and there's been a lot of obfuscation around it, and I'm just wondering if that might be part of the agenda.
So the question is around the SEC's posture and whether or not this is part of a broader strategy to classify securities. My view on this is that the SEC is going to regulate through enforcement until further notice. They believe that the Howey test is ultimately how you would determine whether or not something is a security. And Gensler believes that everything is a security besides Bitcoin, is my view. I don't believe that that is ultimately going to be where we're going to land as an industry, but I think it will take an act of Congress to come in and say, put the safe harbor or something like it in process. Now, to be clear, the SEC could run wild for the next 5 years just on the crazy ICOs and scams that happened in 2017 and 18. So you expect to see a lot more of this, I would say. But what we really need to know is, what is Uniswap? What is Compound? What are some of these public goods that are out there that a lot of people are using that to a lot of people in the industry don't look like securities? We need to get clarity on those. Getting clarity on whether or not some IoT coin that was issued by a company that was failing in 2017, like everyone knows that those are scams.
Yeah, I'll just add that, according to Gensler's interpretation, it's very black and white. He likes to say the crypto industry wants clarification, but we, the crypto industry, don't need clarification. The rules are pretty, clear according to the SEC. It's just that we don't like the rules, which I disagree with. But I think if you look at the substance of what crypto assets are, it's fundamentally a different thing from like equity, basically. And if you look at the spirit of securities laws, why do they exist? It's because investors deserve to know what they're investing in, and management teams have to be honest about the nature of the company and the cash flows and the governance and so on. So clearly we need something like that for tokens, given that many tokens look to be more corporate. Not everything is fully decentralized. I think that's fine. And that doesn't exist. The securities apparatus doesn't pertain well to the crypto industry. So a new interpretation of a disclosure rule that's fit for purpose is definitely warranted. But the SEC can't just define that on their own. They probably do need Congress. We need legislation for that. Is this Congress going to come up with that? Definitely not. They don't have the desire or the political capital to do something tricky like that. So maybe be the next one. But yeah, basically under the current situation, we're not going to reinterpret securities laws, and we're going to be in this stalemate against the SEC. I mean, the interesting thing is the crypto industry can still win legal battles against the SEC, and I think they probably will do so. But ultimately, it's going to require basically new legislation to be written.
Yep, right here.
Hi, my name's Amy Cowan with Maven Chain, and I wanted to thank you. Your newsletters on Fridays, I read them faithfully. But my question would be, beyond DeFi, what application do you think shows the most promise that will actually add value to people's lives?
So the question for our listeners is, beyond DeFi, what applications of crypto show the most promise? To me, the very obvious one is simply just stablecoins. I know that's not very exciting, but for folks in emerging markets where there's enormously high inflation and the banks aren't trustworthy, getting access to US dollars and being able to exit the local financial system is really critical. And I think you'll see a lot of that. We're actually seeing it in countries with sort of political instability. You see stablecoin usage pick up. So that's like the equivalent of being able to get access to US bank account, which was a luxury good for non-Americans for a long time, and now anybody can do that. So that's one very addressable thing. Beyond that, I would say, actually the NFT space is really interesting right now. You're seeing, this isn't something that's gonna save anyone's life, but you're seeing the emergence of physical NFTs, which is basically, merchandise, products, luxury goods, collectibles, which come embedded with chips, which are linked to an NFT. That means and Adidas, Nike, Gucci, Dolce & Gabbana, Prada, they're all doing this. So it's very active in the luxury space. And this means that those products can now be traded on a peer-to-peer basis, and the authenticity of the product is totally knowable and guaranteed. So it gives you strong anti-counterfeiting properties. And it's a way to demonstrate your ownership of the product digitally as well as in the physical world. So that's actually kind of exciting. I would say, even though the NFT sector overall is selling off and the NFT markets are down, we're seeing real world adoption by major brands of NFTs, but with much more utility. So that would be my answer.
Yeah, I was going to say the physical NFT space as well. There's a few Boston companies that are working in that space. End State is one. Another one is Dust Identity that's doing some interesting stuff. I think the bigger, kind of more academic things that excite me the most are just the breakthroughs in privacy technologies. And so I think the blockchain space is really on the cutting edge of zero knowledge systems and things like that. And so if you look at it through the lens of where will this have the most impact on the 20-year time horizon, I think it's just financial privacy and giving people more discretion over the types of transactions they want to make.
Hey, my name's Chris. Thank you very much. I enjoyed listening to both of you. If you had to pick one horse, whether it was the TradFi adopting or adapting into eventually what becomes DeFi, or if it's the DeFi community that exists today, which horse would you back in terms of venture and finding success going forward?
That's a really good question. So the question is around TradFi versus DeFi, and basically, what are you the most bullish on? We invest in both, so we're playing it both ways, I guess I would say. It's very clear that in the near term, traditional financial services are coming to the blockchain space in a very meaningful way around things like custody and trade execution. And so it's really just responding to customer demand to want to hold Bitcoin with a Bank of New York Mellon or want to hold it with a Fidelity. It's hard to imagine that that's going to quiet down at any time. I would say the more exciting projects are definitely on the DeFi space in terms of just net new financial products and bringing financial services to people that historically have not had access to them. There are way more regulatory considerations on that side, though. So from a risk perspective, I think there's a lot more risk of things being deemed to be securities. Obviously, we talked about Wintermute and the hack this week. And so it's sort of the Wild West on the DeFi side, but probably pound for pound where we're seeing the most interesting startups.
I think the question was about whether TradFi can actually embrace DeFi. I think there's no lack of willingness. We certainly talk to these investment banks, and they're very interested in getting deployed on public blockchains and maybe deploying client assets into DeFi, but they are unwilling or unable to do it in this country because basically bank regulators, the OCC being really one of the main ones, tell them not to do it. So there's no law that says a large investment bank can't touch DeFi. They can't put assets into Uniswap or Compound. But they get informal guidance from their regulators saying, don't do it. And they're all pretty frustrated. So they're all, getting into crypto, dipping their toes in, they're investing in crypto firms. They're building, centralized approaches to touching crypto, but they're not really deploying fully into it because it's still considered far too risky from a regulatory standpoint. And I don't see that changing immediately. So I would say, the interesting developments I'm seeing are more from the DeFi side in terms of trying to appeal to legacy finance. The way they're doing that is they're building permissioning back into DeFi so that you can know who your counterparties are in a pool, you can know what the nature of the liquidity is, and you can have like institutional pools of capital in DeFi. So yeah, from my perspective, the bet is more on the DeFi side, the Web3 native side, being able to actually institutionalize and put a few more guardrails around DeFi.
Follow up to that question. If you were a venture company and you were looking for capital, and you had the opportunity to partner with, you were looking for strategic and you had the opportunity to partner with a strategic from TradFi or a strategic from DeFi, more of a nascent player, who would you partner with?
So the question is on, as a venture-backed company, would you put strategic capital on the cap table from the DeFi or the legacy space? I think it's still worth it, raising from traditional financial institutions. We certainly see a lot of that. That's one place where they haven't been shy, and that tends to be worth a lot as a financial services company, I would say.
I would say both. I think that you've seen successful stories from both sides. I think some of these large DeFi projects are investing in venture-backed startups that are building in their ecosystem. There's capital being deployed there. And then on the traditional financial services side, obviously there's distribution there at large scale. And so I don't see a downside of exploring both. Last question.
Thank you guys for taking time. On the topic of Bitcoin scaling, what does the state of scaling solutions look like today? And then maybe as an add-on to that, how does your assessment of that compare to what you would have thought would have happened 2 or 3 years ago?
Yeah, so question is, what's the state of Bitcoin scaling and has it met our expectations? Probably I would say it's much less well developed than I would have thought. 4 or 5 years ago, I thought that we would have a really robust ecosystem of side chains. Most of the side chain development is happening, well, they're mostly called rollups now. They're mostly happening on other blockchains. And there's very few that are deployed in production on Bitcoin. I think one of the things that I hear from developers is Bitcoin doesn't support a ZK rollup, for instance. It doesn't have the right kind of opcodes such that you could build a rollup on top of Bitcoin. Lightning is obviously a great network that's getting mature and more robust, but I actually don't see Lightning as a scaling solution. I don't think I think it services one pretty narrow kind of use case, which it does very well, but it's not, to me, a generalized scaling solution. So overall, I would say I'm disappointed at the pace. If you look at Bitcoin itself, we've had one update to the core protocol in 5 years, and that gave us Taproot, and Taproot adoption is less than 1% of all Bitcoin transactions. So the pace of development on the base layer is very slow. And I think what does need to be built into the base layer would be more suitability to build sidechain products on top of Bitcoin. If you look at Liquid, that was one of the most popular projects, or one of the most touted sidechains that has very little adoption, unfortunately. So I would say where I see promise is actually in rendering Bitcoin portable to other blockchains, such that you can take advantage of the local scaling solutions. And that is what I would encourage builders in the space to do. Create better ways to make Bitcoin portable such that you can use it on Ethereum, Solana, and any of the L2s on those systems. I think that's how we're going to get this convergence of being able to take advantage of technology on other blockchains, because Bitcoin itself is not going to change very much.
Well, I think we're getting rained on here, so why don't we bring it to a close. Thanks to Ian and John and the Cubic team, and thanks for all you for coming.